Good morning. Here is today's Korean economic news briefing. We begin with significant developments in Korea's international economic diplomacy and domestic structural reforms that are reshaping our economic landscape. Deputy Prime Minister and Minister of Economy and Finance Koo Yoon-chul has concluded a pivotal investment roadshow in New York, where he met with major Wall Street investors including BlackRock. The minister emphasized Korea's commitment to economic reforms and highlighted two critical growth drivers: the strong performance potential of the Kospi Index and Korea's anticipated inclusion in the World Government Bond Index, or WGBI. This diplomatic initiative underscores the government's confidence in Korea's economic trajectory and signals to global investors that Korea remains an attractive destination for capital inflows during these uncertain times. On the domestic front, the government has announced comprehensive reforms to address structural wage inequality in public sector contracting. The Ministry of Employment and Labor, coordinating with multiple government departments, is raising the minimum bid price threshold in public procurement contracts by 2 percentage points, from the current 88% level. This measure targets a critical problem: the practice of accepting abnormally low bids, which has historically driven down wages for contract workers. The government also plans to extend contract periods to 2 years and mandate employment succession clauses to improve job security. While these reforms position public institutions as model employers demonstrating fair contracting principles, implementation faces challenges regarding cost absorption and potential impacts on the broader outsourcing market. Turning to global economic conditions, we must address a sobering reality facing the world economy. The International Monetary Fund has issued a stark warning that global government debt will exceed $100 trillion by 2029, reaching levels not seen since World War II. This debt explosion stems from ongoing Middle East tensions and the consequent need for countries to inject liquidity into their economies. Notably, the IMF has specifically flagged Korea's fiscal position, projecting that Korea's debt to GDP ratio will reach 60% by 2029. This serves as a crucial reminder that while Korea's reforms are commendable, they occur within a global context of deteriorating fiscal discipline and mounting financial risks. Yet there are bright spots in the global economic picture. China's first quarter GDP growth came in at 5.0%, exceeding analyst expectations of 4.8% and improving upon the previous quarter's 4.5%. Manufacturing remains the backbone of China's growth trajectory, providing crucial support for economic expansion. However, Korea faces headwinds from global energy markets. Import prices surged 16% in March, reaching a 28-year high, driven primarily by oil price volatility. Dubai crude surged from $68.40 per barrel in February to $128.52 in March, an 87.9% increase, while the Korean won weakened against the dollar. The Federal Reserve's latest Beige Book acknowledges that Middle East tensions have created substantial economic uncertainty, with energy-driven inflation pressures potentially reigniting price increases in America. Fed officials now expect the April 28-29 policy meeting to result in an interest rate hold rather than a cut. Domestically, our financial markets present a mixed picture. While the Kospi Index surged to approach the 6,200 level, coming tantalizingly close to all-time highs, our bond market moved in the opposite direction. Government bond yields rose across all maturity ranges. 3-year Treasury yields climbed 1.2 basis points to 3.34%, while 10-year yields increased 2.0 basis points to 3.675%. This divergence between rising equities and rising bond yields suggests market participants are reassessing risk premiums and inflation expectations in light of global energy disruptions. The $1 exchange rate weakened to 1,474 won and 60 jeon per dollar, reflecting broader currency pressures facing emerging markets. However, Asian equities rallied broadly, with Japan and Taiwan posting gains of 2.38% and 1.12% respectively, following strong overnight performance on Wall Street. Market analysts suggest equity investors may already be pricing in resolution of Middle East tensions, but the crucial question remains whether Korea's economic fundamentals can sustain this rally. In the real estate sector, Seoul's property market shows diverging trends. March home sales price increases moderated to just 0.39% month-over-month, the slowest pace since May of last year. However, Jeonse and monthly rental prices climbed significantly, reaching their highest levels in 3 months. Regions outside the 3 Gangnam districts saw broad-based price appreciation, while supply shortages are complicating housing transitions for residents. With multi-property owner capital gains taxes resuming in May, the market faces additional uncertainty regarding inventory flows. Industry and technology sectors demonstrate resilience and strategic repositioning. Lee Soo Group, marking its 30th anniversary, unveiled ambitious targets: 6 trillion won in revenue, 600 billion won in operating profit, and a market capitalization of 25 trillion won by 2030. The conglomerate is pivoting toward batteries, artificial intelligence, and biotechnology, sectors critical to Korea's long-term competitiveness. Meanwhile, Hansong Clean Tech has been selected for a government-funded project developing next-generation ultra-pure water production processes essential for semiconductor and display manufacturing, reinforcing Korea's technological infrastructure leadership. For investors, today's briefing presents both opportunities and cautions. The KOSPI's recovery signals confidence in Korea's economic resilience and government reform efforts, attracting international capital despite global uncertainties. However, energy price volatility, weakening currency pressures, and rising global debt levels warrant careful portfolio positioning. The government's wage reform initiatives, while economically sound, require monitoring for potential cost inflation. Real estate investors should watch May's capital gains tax implementation closely, as significant portfolio adjustments may occur. For ordinary citizens, the combination of rising import prices, wage structure reforms in public contracts, and tight rental markets suggests continuing affordability pressures. However, government efforts to address structural inequities and attract foreign investment offer long-term growth potential for employment and economic opportunity. That concludes today's Korean Economic News Briefing. Thank you for your attention.